What is up, guys? All right, so in this video, we're going to be talking about market phases and market cycles. Specifically, we're going to be talking about bullish markets, bearish markets, and consolidation markets. We're going to start off with a bullish market and what it is, and structure rules and how to identify break a structure and when market actually tends to break. So, first thing you guys need to understand is bullish markets, bearish markets, and a consolidation market. A bullish market is basically an uptrend. It is basically when price wants to scale towards the top side, when people are buying, when there's more buying pressure and buying volume in the market than sellers for that specific day or weeks or months. You know, depending on the time frame, you could see different trends. But for this purpose, we're only going to do H4 and daily time frames. All right, you can do weekly too. Those are the ones I like to choose the most. But if we look at here, for the last week or so, again, this is the daily time frame, market has been on a downtrend. We see that. You understand? But then if we go to the weekly time frame or to the monthly time frame, we could see that price has been on a upward trajectory, maintaining its lows to continue pushing towards the top side. You understand? So if you see this, you're able to understand what I'm saying, that depending on the time frame will determine more or less what structure or what market phase you're in. Okay, so for a bullish market, you have higher highs and higher lows. For any market, it's different than price. So in terms of price, you have resistance and support. So in terms of price, you have resistance, I'm going to abbreviate it, resistance and support. In terms of structure, you have highs and lows. Two different things. And why I say that is this. In terms of price, you can have something that looks like this. Higher high, higher low, higher high, higher low, higher high. Resistance, support, resistance, support, resistance. You understand? So they're kind of together. Resistance, support, resistance, support, resistance, highs, lows, highs, lows, highs. The only difference is that structure tells you if pricing can continue being an uptrend or break out towards the downside or vice versa. Resistance and support levels can be broken at any given moment. So in this case, you have something like this. We have a low. So this is a support level as well. If price comes back up here and breaks this level, what do most people think? It broke structure, and now price is anticipated to do that. That's what most people will do, but in reality is that price never broke the low. So a lot of times it just continues to push towards the top side. And the low point that you really want to get involved in is this low point range. You understand? When it comes to support and resistance, that's in terms of price. Price can break a level of support, break a level of resistance, and that does not mean that it broke structure. In terms of structure, if price breaks a low, more times than not, it broke structure towards the downside. If price breaks a high, it'll continue pushing towards the top side. So they're two different things. So most people are taught that an uptrend looks like this. That this is how a typical uptrend looks like. Excuse me. Higher highs, higher lows, higher highs, higher lows, higher highs. That is how most people are taught that an uptrend is. Let me just change these colors real quick. Most people are taught higher highs, higher highs. This is what they're taught. They're taught higher highs and higher lows, higher highs and higher lows. So they're taught higher highs, like higher highs and higher lows, higher highs and higher lows, and higher highs. That this is an uptrend. That price needs to make this type of form to be an uptrend. That is a perfect uptrend. That is the most ideal situation that we want to have, but that is not the rules for an uptrend to be qualified as an uptrend. An uptrend is an uptrend because price continues to push up. You understand? So your focus point of an uptrend are your lows. As long as price maintains its lows, price will continue to push towards the top side because it's creating steps. As long as the market creates steps, as long as the market creates stairs, it will continue to push towards the top side. That is why you can have something that looks like this. And continue to push towards the top side. Why is that? Again, because the market is creating steps. As long as the market creates steps and as long as the market creates stairs towards the top side, price will continue pushing towards the top side. Now, your focus of an uptrend are your lows. Your objective is to create new highs. The same thing, if you're in a bullish candle, what's your goal? Your goal is to go up. So on an uptrend, your goal is to go up. Think about it like this. Inside of a bullish candle, you have an uptrend. So inside of a one daily bullish candle, you have 24 1-hour candles. You have 6 H4 candles. You understand? You have 48 30-minute candles. You get what I'm saying? You have 96 15-minute candles. That's what you have inside of one daily candle, so in a bullish candle. So inside of a bullish candle, it is a uptrend. So the purpose of an uptrend is to continue to go up. So once price comes to these low points, it's aiming towards the top side or to create new highs and break the current highs. But as long as price creates higher lows and as long as price maintains its lows, price will always continue to push towards the top side. So again, it's not about if price is creating higher highs and higher lows. That doesn't define an uptrend. What defines an uptrend are its lows. As long as price creates higher lows, price will continue to go up. Because you can have something like this, which I'm sure a lot of you guys have seen, and not know what's going to do. But as long as price continues to make higher lows and this level and this low is being respected, price will continue to push towards the top side because it's maintaining its structure rules. Okay? Now, again, the objective is to create new highs. The focus, how do I know I'm in an uptrend? Because price is creating new higher lows. Okay? Now, a higher low can be retested and still maintain structure. As long as the higher low is not broken, price can test this area 20,000 times. It does not matter. As long as that area is not broken, every time it comes to this point, price will reject towards the top side. Okay? That makes sense? Perfect. Now, never sell in an uptrend. Now, we know that's true and we know it's not true. If you guys saw the first videos that I did, the most important thing about this is what? Where am I in the market? If I'm at a low point or if I'm at a high point. That is the most important thing when it comes to trading. If I'm at a low point, that means what? That means that I'm looking for buys. Doesn't mean that it is a buy, but that means I'm looking for buys. If I'm at a high point, that means what? I'm looking for sells. Again, it doesn't mean that it is a sell. It just means that I'm looking for sells. Okay? So now when it comes to a bullish trend, when it comes to an uptrend, when it comes to a buying market, whatever you want to call it, never sell in a bullish market. We know that's true and we know that's not true. If I'm at a high point in the market, I could sell it till it reaches a higher low. Again, since we're doing this on higher time frames, H4 time frame and daily time frames, we're not talking about a little push. We're talking about massive amount of pips possibly. You understand? Let me find one. So let's say take GU for instance, once this wants to load up. So let's take GU for instance. So GU in this case, we see that price was pushing towards the top side. Like we see that price is pushing towards the top side. And this is a retracement, that's a push, this is a retracement, that's a push. You understand? But we see that price is pushing towards the top side. If I'm at a high point, I'm not going to look to buy it. Why? Because it has a higher likelihood of selling. So again, if you're not going to sell on an uptrend, you missed out on possibly 75 pips in profit. Even though the market was on a uptrend in this format, it broke out of the triangle, which we're going to go out of patterns and we're going to talk about them and you're going to verify why I like them. It broke out of the triangle and now it's basically retesting the level of support, resistance and support to build towards the top side. If we didn't sell on this uptrend, one second guys, if we didn't sell in this uptrend right here, because again, I'm an intraday trader. If we didn't sell in this miniature uptrend that's occurring, we would have never profited. So again, never sell in a bullish market. It is true. But if I'm at a high point, I can sell to reaches a level of support, reaches a higher low, to then continue going up. I can sell till it reaches a higher low to then continue to push towards the top side. You understand? Now, once a higher low is broken, structure is considered broken. Okay? Once a higher low is broken, structure is considered broken. So what I mean by that is this. When it comes to the market, you have highs, then you have lows. Pretty much the bottom is always going to be a low, the top is always going to be a high, depending on the direction you're coming. What I mean by that is this. If you come down here and this comes here, now this is a high. Low turned high, support turned resistance, lower high, lower high, lower high. It just depends on how you're coming, you know? But the top is always going to be a high, the bottom is always going to be a low. I help you identify it. So if you're on an uptrend, once your higher low is broken, structure is considered broken. It's not about the first higher low, guys. It's about the second one. It's not about this one. It's about this one. If price does not break it, price will continue to push towards the top side. And why do I say that? Think about it like this. A business that was made 30 years ago has a longer and stronger foundation than a business that was made 6 months ago. This was recently just made within maybe the last day or last week, depending on what time frame you're in. This took longer to make. This even took longer to make, and this took longer to make. You understand? There's stronger price points and data points inside of the market. So it's not your first higher low. It's your second higher low. A lot of people think this is going to happen. Price is going to come here and reject, and then they're going to look for sells. Unless this is on a weekly high, let's say price right now is on a weekly high. More times than not, it won't do that. It will continue to push towards the top side. Or maybe it does do this and bounce right off this lever again and start forming a triangle. You know, that's a possibility that can happen. But once price comes to this low, price is continuing on its uptrend format. Okay, it's not about the first higher low, it's about the second higher low. Typically, we're going to be looking for this on H4 timeframes. So let me see if I can find an actual thing so I can show you. All right, so it's not about the first higher low. I count that as a low on a smaller time frame. You can call this as a low if you want. That's fine. And then you can say this is the next low. You know, I like to do zones. I'm going to show you how I properly do zones. But for this demonstration, I'm just going to show you this. Okay? I'm just going to show you this for this demonstration. So once price broke the first higher low, price came down to the next level of support. Once it broke this level of support and maintained itself here, we already knew that price was going to push towards the downside. We already knew it. We just want to wait for a retest. What did it do? Price came back up to a strong level of resistance, forms a head and shoulders. I'll show you the pattern so you guys could understand. You understand? Easy peasy pattern. And I'll show you how to identify them. I'll show you how I identify them and how I look at it later. But the pattern was there. The setup was there. It was a very easy setup to see. And price broke structure. So now we knew that price would continue pushing towards the downside. Once you add in a little bit of price action, understanding the daily candles, understanding the weekly candles, understanding wicks, it becomes 10 times easier to actually do it. 10 times easier to actually do it. You understand? But that is basically what a bullish structure is. That is what a bullish structure is. That's what a bullish market is. Again, we have a bullish market, we have a consolidating market, we have a bearish market. Okay, inside of all that, you can have uptrends, trending markets, retracements, all those different type of movements. But I went over what a bullish market is. Again, the focus of an uptrend is your higher lows. Your objective is to create new highs, but your focus is your higher lows. As long as the market is creating higher lows, price will continue to push towards the top side. As long as the market is continuing to create higher lows, price will continue to push towards the top side. Once price reaches a low, what are we looking for? Buys. Once price reaches a high, what are we looking for? Sells. Since we're on a higher time frame, we're talking about H4 and daily, understand that this little retracement push could be worth, that's a retracement. Understand that, but it's worth 73 pips. People don't understand that. Again, we're looking on higher time frame, H4 and daily time frames. So since we're doing higher time frames, it's a lot easier to catch a lot of pips. You just wait H4 hour increments. Okay? So this is a bullish trend, a bullish uptrend. Again, the way I identify it, as long as price continues to make higher lows, price will continue to push towards the top side. As long as price continues to make higher lows, price will continue to push towards the top side. You understand? So that is what an uptrend is. Price can literally do this. 1 second, guys. My dogs are going crazy. Jesus, in the background. Sorry about that. Price can make higher lows and create lower highs and continue to go up. Why? Because again, the focus point are your high lows. Objective is to create new highs. Never sell in a bullish market. We know that's true, and if it's not true, if it's at a high point, we're going to sell it until it reaches a low point to continue buying. For example, if you were up here, you're not going to buy it. Why? Because it has a higher probability of continuing to go down than up. You understand? You're buying it at a high. You never want to do that. You always want to buy price low. Same premise for here. Why would you buy at this point? Buy low and sell high. As long as a higher low is maintained, structure is maintained. Price can test the same low 30 times. As long as price tests the same low 30 times, it will continue to go towards the top side. It will continue to push towards the top side. No matter what, it will always go towards the top side. And again, once a higher low is broken, structure is considered broken. Once the second higher low is broken, structure is considered broken. Okay? All right, guys, the next video, I'm going to be talking about a bearish market. All right, so stay tuned. If you guys have any questions on this, you guys already know you guys can hit me up on the Discord chat. I'm going to give my number to everybody. So you can hit me up, text me, call me, message me on Instagram, email me, whatever it is. Thank you, guys.